What's going on, guys? In this video we're going to talk about Bitcoin and a supply shock. Is it coming? What is the Bitcoin on exchanges looking like? We're also going to talk about CPI and PPI, and we do have earnings coming for Bit Digital, so we'll take a look at its chart. Now everything I go over will be linked down below for you. Let's start here. $1 billion worth of Bitcoin exits Coinbase in a day as analysts warn of a supply shock, meaning Bitcoin is leaving the exchange, likely for long-term storage. On May 9, Coinbase saw 9,739 Bitcoin, worth a dollar amount of more than $1 billion, withdrawn from their exchange. This is the highest net outflow recorded in the year 2025. This article also talks about growing institutional demand, bringing a diminishing Bitcoin supply on exchanges. And here's something really interesting. In 2025 alone, corporations have bought 4 times more Bitcoin than all of the US spot Bitcoin ETFs combined. We're close to 200,000 Bitcoin already, which is the annual supply of new Bitcoin. Now, the math isn't mathing. If you add 450 Bitcoin per day, you times that by how many days are in a year. This is what I get, 164,000. Maybe they're just rounding things up. But yeah, Bitcoin's illiquid supply reached 14 million Bitcoin. Looking at Bitcoin balances on exchanges, you'll see it's near new lows, but not there yet, getting very close. Right now, it is basically saying 2.18, 2.17 million Bitcoin on exchanges. We hit a low of 2.15, getting very close again. Soon we will see a new all-time low. Bitcoin is becoming more scarce. This will keep happening. More Bitcoin is being accumulated and stored than the Bitcoin that's being produced as time goes on. Plus, on top of that, every 4 years, we see the incoming supply of Bitcoin, the daily supply, getting cut in half because of the halving, which we experienced in 2024. The next one is in 2028. This Bitcoin balance is going to keep getting lower and lower and lower until we're literally fighting for Satoshis, fractions of Bitcoin. And also, as a side note, this is the cycle where retail basically loses all hope of being able to accumulate a whole Bitcoin unless you're much more wealthy than the average person. The average person will never be able to acquire 1 Bitcoin moving forwards. It was a lot easier to acquire 1 Bitcoin when it was $15, $20, $25, $30,000 than being able to acquire an entire Bitcoin sitting at 104,000. Could there be pullbacks? Of course. Could Bitcoin in a future bear market come down to levels we don't expect? Of course. But are we ever going to see a $15,000 Bitcoin again? I think you know my answer, but I'll let you answer that yourself. Now, I had to highlight these. I'm not into Crocs at all, but these Crocs I would wear. This is a limited edition, limited edition, 2,100 pairs. Comes with a Bitcoin magazine gibbets charm, adding a unique touch of Bitcoin flair. And here they actually are right here. They are still claimable. You can still claim a pair. So consider checking those out. This would be a fantastic way to spend some of your gains. Let me know what you guys think of these. Moving on, we do have PPI coming out tomorrow as of this upload, coming out May 15th in the morning. We did receive CPI yesterday, and it came in at a 2.3% that is. And I wanted to show you this. This is just kind of the long-term trend. We are continuing down after we spiked in mid 2022, I should say, getting to new lows. I mean, we saw 2.4% in October. We're down to a 2.3. The forecast was a 2.4. This is going in the right direction, but not yet at the Fed's 2% target. Getting closer is a good sign. I mean, just look at how things move in cycles. You know, you get to these crazy lows. The Fed has rates extremely low. We see a massive amount of money printing. We of course see these different inflation indicators spike, hit a high in 2022, and we have been coming down ever since with little hitches along the way. But you can see where the trend is going. We are clearly going down. We are clearly heading towards the Fed's 2% goal, making it more and more likely that we are getting rate cuts. But keep an eye out for a PPI. That's going to be the next thing the market's watching. That's coming out tomorrow as of this upload. And it could alter the Fed rate cut decision, or likelihoods, I should say. And here we are at the Fed Watch tool. I'll leave this down below for you too. The market is starting to anticipate cuts getting in towards September, towards the end of year. By the end of year, it is anticipated that we could see somewhere around 2 cuts, possibly 3. Possibly 1. Most likely, these are the most likely scenarios though. Pretty unlikely we're just going to leave rates where they are, and pretty unlikely we get, more than 3 cuts, or more than a 0.75 total. But unemployment numbers, job numbers, and of course inflation numbers are going to alter these odds. PPI might be the next thing to do it tomorrow. All right, we got to look at Bitcoin. Bitcoin's been performing very well. been just continuing up this beautiful ascending channel, very clear pattern, getting ever closer to that golden cross, guys. And right now we are hung up in between 106,000, 102,000. This was a level we were talking about. This 106 will be important to crack. If we can crack this, we are testing our all-time high. This is the last level to break, in my opinion. And then we're testing all-time high, knocking on its door, saying, hello, let me in, let me to new prices. We do need to hold this 102 first, but things have been looking fantastic lately. Things have been getting more and more positive and have been going in the right direction. Now, some people are pointing out this overbought RSI on the daily, but let me show you, we can go much more. We can, of course, consolidate and head higher. Look at how overbought our RSI was back in November of 2024. It was even more overbought, and we didn't pull back, we didn't drop, we actually went higher. So keep that in mind looking at the RSI. What you want to look for is divergences and other indicators, certain resistances, support levels. But getting out on an RSI like this alone, I think would be kind of foolish. You could keep an eye on the RSI and also keep an eye on this ascending channel. If we were to break this ascending channel, we may be retesting some lower levels. If we fail 102, we might be heading down, to the 98 area. If you're going to get in, get out like that, react on things, you need confluence. You want to look for more than just one indicator of getting in, getting out. Also, another thing we were seeing during this time is we did see the RSI spike. We did keep going higher, but we started seeing a bearish divergence. The price kept rising while the RSI was cooling. So keep an eye here on bearish divergence. If we continue going higher and the RSI keeps cooling down, that is a sign that there might be a drop in the future, but we may go a little higher first. So far, I'm not seeing any divergences on the daily, but if you go to the 4-hour, go to smaller time frames, you can see that the RSI has been steadily cooling down and the price has been pretty steadily rising. We may be due for a little retracement down to our support of 102, down to this ascending support line before we go higher. Now, if we do get our golden cross, I'm expecting it. I think it's almost a certainty at this point. But if we do get this, I don't think it's going to be a similar run to what we saw last golden cross, which basically gave us right around a 60-something%. The run up leading to the golden cross wasn't as drastic or as amazing as we saw here. The run up to that golden cross was roughly 26%. The run up to this potential golden cross, already we're up 36% from our lows. So maybe there's a little more anticipation of this golden cross or just other aspects. We are running up more than we saw before. So I personally doubt we're going to see like a 50-something% move after this golden cross. But let's say we start testing all-time highs, we get our golden cross. Say we're just trading sideways even at this level, we finally get that golden cross. A move to where I think Bitcoin's all-time high could be is roughly another 43%. Bitcoin, if it can do 43% by the end of the cycle, I would have been right. If it does less, I'll be wrong. If it does more, I guess I'll be wrong too. I think another 43% over the rest of this year isn't at all unrealistic, isn't too optimistic. I still think 150K is still very reachable, is still very doable. A break of all-time high could bring us there. A break of Bitcoin's last all-time high from March of 2024 brought us about 45-46%. Now, of course, because Bitcoin has moved up from there, it takes more money to make Bitcoin move up. We might not see exactly the same performance, at least in such a short amount of time. But over the rest of this cycle, over the rest of this year, can we see 150K Bitcoin? I still do think so. But let me know what you guys think. Do you think 150K at this point in the cycle is too optimistic? Is it not optimistic enough? Are we only reaching 120K? Is the top already in at 109 or so? Now, do you want to mention Bit Digital? Their earnings is coming up. It's expected to be on Thursday, the 15th. And looking at Bit Digital, like a lot of the miners, they're still pretty bearish, still pretty ugly under moving averages, facing death crosses. Some are starting to make improvements. Bit Digital has been in a recent uptrend as of late. Keep an eye on this ascending pattern, this ascending line here. We're now over the 50 MA. We have quite a climb to get to the 200 MA, and it has quite some work ahead of it to actually get a golden cross again. They're anticipating a loss on their earnings, as most miners have seen. These Bitcoin miners, in my opinion, absolutely need Bitcoin to break out to new all-time highs. That will bring the excitement again. That will cause them to outperform Bitcoin. During good times, they can outperform Bitcoin. During bad times, they will drop more than Bitcoin. They will do horribly. There are times that they will outperform. Looking at the weekly, it does look like it's breaking, or it already broke its falling wedge pattern. This is a good sign. When we get a break of a falling wedge, typically you see a good reaction, and we're seeing a decent one so far. You know, the reality is these Bitcoin miners have to get back to profitability. They need to start pulling cash in, not burning cash. There's a reason why Wall Street sells these off as we get to where we expect unprofitable quarters. There is a reason that Wall Street absolutely pumps them when they flip from unprofitability to profitability. These Bitcoin miners have massive volatility, massive range. During good times, they're profitable. Everyone wants a piece of them. Something like a Bit Digital has in fact done an 8x, done a 7x, done nearly a 10x this cycle so far. At certain points, when they have some quarters of profitability, the market does pump them. When they have quarters of unprofitability, the market wants nothing to do with them. In my opinion, those times when the market doesn't want them, these times when no one wants them are the times to buy. These times when everyone says the miners are trash investments, those are when you want to buy. Because those people saying the miners are trash investments are the people that bought the tops. It's sad, but a lot of retail tends to buy when there's attention on these stocks, tends to buy when they've already been running up. They don't want to buy when they've been seeing horrible days, when they're at oversold on the RSI. I mean, look at this. If you only tend to buy these Bitcoin miners when they're massively oversold, you can do pretty good. Look at here, it was massively oversold, massive run up. Over here, getting towards oversold. If you started dipping your toes when we were at these oversold levels, you would have ended up in the green. Now here, we were also seeing a bullish divergence actually. We saw the RSI start picking up while it was still dropping. This was a sign that we were going to turn around. We're starting to get that turnaround here. But buying while these stocks are not in favor, buying while everyone's talking shit, excuse my language, buying when people are complaining, buying when people are unsure. Those are the times you want to accumulate these Bitcoin miners, if you're willing to take that risk. For some people, the Bitcoin miners aren't for them. They can't handle these 20, 30, 40% drops, and that's understandable. These Bitcoin miners can definitely run us ragged. They are definitely high risk as well. They're not always profitable. But when they are, oh boy, do they get some massive runs. I guess my point is don't follow the pack. Buy when everyone's complaining. If it's a stock you believe in. You buy while it's fearful. You buy while people are all worried. That is the way you get the most multiples. You don't get the most multiples by chasing tops. But anyways, have you given up on the Bitcoin miners, or do you accumulate while there is max fear? Have you been accumulating while there's max hype? Of course, there's different styles for everyone. If you're just buying the hype, setting a stop loss, that's perfectly fine. But I do think the most multiples can be made if you're buying during the worst times. Buying when everyone is feeling just bleak and hopeless. But let me know what you guys think about that. When do you think our first rate cut is going to be? Is it going to be in September as expected by the CME Fed Watch tool? Is it going to come in earlier if we see some positive inflation numbers? If we see employment go in the wrong direction, meaning higher unemployment could bring more rate cuts? When do you think the rate cuts are coming? And also, do you see Bitcoin breaking a new all-time high this month? Is it coming later in the cycle or not at all? I think there's a good chance that it comes this month, along with our golden cross, which is getting closer and closer to popping up. But anyways, thanks as always for watching, guys. I appreciate you all, and I'll see you next time.